Good morning. Good morning. Good morning. Testing the mic. We have an incredible amount of delay today. Morning. Okay, I need to work on that latency. I don't mind being behind the market a little bit, but wow, this stream is just a little bit further behind the market than I really would like, and we'll work on that. That's not even a problem. So, good morning, everybody. I hope you guys had a wonderful weekend, a wonderful holiday. I hope you spent time with your families. I am Grady on the charts, and this morning. Let's go ahead and take a look at what we have in the news. Today we have some international news. I believe that's Denmark and Great Britain, but that news isn't coming out until Wednesday. I believe those markets are closed for the Easter Monday. So Wednesday, Thursday, and Friday, the market seems to be pretty quiet. We have durable goods on Thursday, 8:30 a.m., and existing home sales also on Thursday. But that's just about it for this week. So let's go ahead and see what we have here on the charts. The pre-market has been quieter than I had expected it to be. Although on the 15-minute chart, we've been having this downtrend, right? We've been continuing through this downtrend. Kind of marked out a few levels here, but it seemed as if we just have sort of this constant and stable movement to the downside. The market is just open, which is something I actually don't like, right? And I've made this kind of, clear. It's something I've said before is when the market is in the pre-market trend or the Asian session trend, and we come into New York, it just seems to be completely seems to just come into the market kind of lifeless, right? So I don't like to see that. So I don't really have a lot of expectations for today. I like I said in the video I made last night, kind of off the cuff, and it was about trading psychology. Today I really wanted to trade defensively. I wanted to just come in. There we go. There we go. I wanted to come in and I wanted to see how the market was performing before I decided to get involved in any way, right? So if there's anything that I thought I wanted to do, if anything I wanted to see, I wanted to take a look at the market first, let it begin to, you know, filter through all of the processes that it would need to because of the long weekend, and then get involved after that, right? With several of the other markets not being open, then there's still some how would I put it, unaccounted for data that we would need to process. We do have, I think, a bit of a gap between the close on Friday and today's open. So I'm going to take a look at that. And this is the range that we have between the close on Friday and today's open. I am going to just pull this here, give us an opportunity to kind of take a look at that. Oh boy. I hope you guys had a real good weekend. Myself, I'm gonna tell you, I had a very strange dream last night. Actually, early this morning, right before my alarm went off, and I had a dream I was working at Walmart, and let's see what the chart is doing. I had a dream I was working at Walmart, and it was a huge supercenter, and inside the store, they they had started consolidating. Now this is my dream. This is not anything I read in the news or anything. But inside the store, they began to consolidate all of the merchandise into smaller parts of the store. The store was packed though. There were people coming and going. Every aisle was full of people checking out, and I was fulfilling like orders, right? So people would use Instacart or they would use one of these brands to place orders, and I was fulfilling the orders and like bringing it to the register. And whoever the supervisor was there, he stops me as I'm in the middle of the doing whatever I was doing, and he says, "Hey, guy." I guess he like, if you guys were ever in school and your coach calls you by your last name, it's kind of how he addressed me. He was like, "Hey, guy, hey, Powers, uh, it's okay for you to go use the phone now, and you can take a break. Let me go to the restroom." And he was giving me permission to go use the restroom. And I don't think I have to tell you guys. It seemed like a nightmare to me. Not because I have anything against hard work. It had nothing to do with hard work at all. It was something about the idea that he was telling me it was okay to use the restroom, and I woke up disturbed, and I had the feeling like I did not want to get out of the bed when I first woke up because I'm thinking to myself, "Oh man, another day on the job, and my every moment is managed by somebody else. Like, are you using the restroom right now? Have you been in the restroom too long?" It freaked me out. It really freaked me out. And then I woke up and I got on the chart this morning. And then again, when it comes to trading psychology, I had to kind of back off because, sometimes some of us have a chip on our shoulder about our financial situation that we want to act out in the market, right? We want to prove a point. We want to do some heroics. We want to dunk it, right? We don't want to go in hard and dunk it. I'm looking at how we just traded up into this imbalance and then we turned over and we just dropped down right here. It's very early in the day, and I'm just kind of watching this level. What does the hourly say? Hourly says is that the high of this candle is it's in the wick of the prior hour candle. We just ran up there and dropped down. So yeah, so again, like I said, I may even let trades pass by this morning without getting involved because what I noticed from my analysis of last week is almost every trade I got into, I took an early loss in the day. And even though I was profitable in that day, I took an early loss because I rushed in on a hunch, right? I saw some early market movement. And I'll get that because there's always this one day where it's exactly like this. We're looking at the chart and we see the market open up. We see the market's extremely heavy. We see that on the 15-minute chart, we're dropping down toward the low of the prior up close candle, right? We just ran the pre-market high, right? Not the pre-market high, sorry, that's not the pre-market high. We ran this previous high into this imbalance and then we roll over. So now, right? We're thinking exactly what we're seeing here. Like, whoa, look at the markets just plunging. So that's what I'm talking about. So last week, I would have tried to take this short straight off the open. As soon as we saw it hit this gap, I would just have jumped in. However, what I racked up was racked up a lot of drawdown that I had to address. And so look at all these relative equal lows. So it really just consumed my profit in the long run. Although we had a green week last week, very grateful for that, very happy about that. It's just that those are the things that I would like to address, or those are the things that I would like to um don't want to repeat, right? And I'm sure it's something that I'll always deal with, right? I'm not saying um that it's gonna evolve into some level of perfection. What I'm saying is if we notice that there are these habits that we have, right? What am I looking at? What am I looking at? Why did we drop down, place this wick, and then pop right back up like this? What are we doing? Did we run liquidity out below this level to make a short-term move to the upside? Right? Because one of these is the manipulation, right? Sort of a consolidation here. Push to the upside and a dump. On the on this level, on the 1 minute, right? Regular trading hours. I'm squinting my eyes because I'm looking for fair fair presentation, fair value gap or an imbalance. What is it? What am I looking at? And I was telling my story and just trying to pay attention, but this is the issue of Monday, right? we have our weekend eyes. We have that sort of just, we're not watching anything over the weekend as intently as we watch the market. So when we come back into the market, sometimes it's very difficult for us to literally see what we're actually looking at. I'm going to pull up a 2 minute chart. I don't see clearly what type of price action this is. Maybe I should consider consolidation through the morning range, right? Calculating some of the markets that aren't open right now. Maybe some moderate to some average or more moderate price movement today. We did have a nice little slide to the downside in over the weekend. Perhaps we're going to retrace that range a little bit, then move down further. Mm, okay. This is trading entertainment. That's one of the reasons why my latency is so low. And I know a lot of traders actually trade in sync with the market. Because I guess I'm assuming that they're offering, some type of a something so that, you guys are really there with them and oh, excuse me, so you can feel like you're all making money together. You see this on the 5 minute? Did we invert this gap? I see there's an imbalance between this level and this level. I'm just watching it. Hmm. Yeah. Hmm. Had a conversation this weekend about gambling and trading. And I believe the main point of the question, let's not say this question, but the similarities. Okay, now we've hit this sort of a imbalance here on the 2 minute, and now we're also moving down. Nope, no, no, nope, nope, nope. Yep. So already I am questioning, very doubtful of all of the movement that we're seeing here. But the question was between gambling and trading, and I frame it as a question. Um, the one thing that I also noticed is that we just took last week's low. Right now we've just taken last last Wednesday's low is here. So we run below Wednesday's low, back up above it, back below it, back above it, below it here, taking out today's current low. Then we've made this sort of a price in higher. You see this low is rising. This is a higher low. This is a higher low. This is a higher low. This closes here. This closes here. So the question is all in alignment here. I wanted to kind of vamp for a second to let the market mature, but I don't think I'll be able to really get that off my chest right now. Although I will just kind of put little points in as we go along. My perspective was when we're trading, we in hindsight can see the market gave clear communication in hindsight. In hindsight, as to where the market was going, and it's our job as technicians to accurately interpret price action and its relationship to levels and the time of day and all of the indications um, the extent to which price is either going to move up or move down. When a trader sits and is looking at the market, there are a couple of things that we could say if they cannot clearly determine where they believe price is going. Number one is in consolidation, which means that it is giving signals in both directions and it is trading thusly, right? It's trading up and it's trading down, and it's trading up and it's trading down. Secondly, if a trader is looking at the market and they cannot ascertain a bias where they believe the trade is going to go, it is probably because of their error in interpretation of price action. Not that the market is doing something weird, it's just that they're looking at the wrong signals or they're looking at the wrong levels to base their opinion on. So, in both of those conditions, the trader is uncertain as to the direction of the market. The market is going to go either up or either down based on news or based on time of day, price action, or whatever, just as this price began to slip and slide. What I did not like at this point was this level. It's sort of a strong rejection level as we closed here. Once we got to this area that did not appear to be a gap of any real kind. Maybe there is. Maybe if we were to zoom in very tight between these levels, that body and this wick, perhaps that's our first presentation fair value gap. Okay. All right. I'm still not super and or overly eager to get involved here. It's 9:46 a.m. Oh, no, excuse me. Okay, so what I do believe is I do believe that this is first presentation fair value gap. It is very small, but we traded exactly the consequent encroachment. Then we traded above, excuse me, and then we moved away. Excuse me. Hmm. hmm Yeah. Prior to 10 a.m. today, I'm not sure if I want to take any trade prior to 10 a.m. This is a very nice delivery from the first presentation fair value gap. But I am not, yeah, again, I'm not really just, Now, at the end of the day, after the market has moved a thousand points, I'm going to say I had my chance, I had my shot. All I needed to do was take my entry. Um, that is FOMO. That's just the fear that I'm going to miss out on this major move. So I should jump in advance of the move to get on side, to get on board. Although we just took higher time frame lows, that's fine. Maybe a retracement should be in order. Um, we just ran the prior last week's low. So maybe a retracement back into the range might be in order. Oh, excuse me. Before we move lower. All right, we just popped up here, just for a second. And now what I'm looking for is a movement toward the 950 macro. Looking for something to happen at the 950 macro. Now, one of the things that right, right? You see what I'm saying? My thought process was get short here when I saw this, and I'm saying, oh, it's moving without me. Now that it's popped up, now I'm saying to myself, huh, that's interesting. 940 just prior to the macro, the market turns over and then pops up. How much of a pop up is it going to give us though? We just retouched the first presentation fair value gap. But this is the very beginning of the macro. At the very beginning of the macro, I'm not really, no, I'm not really, no, I'm not really excited about that. I would love to see what we have at 10 a.m. And then I think at that point, I'm willing to put money at risk at 10 a.m. I would love to see us rally to a particular point, right? Then I would assume that this rally would be our um manipulation, right? It would be just an impulse in the opposite direction, run on stops, take out liquidity, and then it'll give us a prime entry for the continuation to the downside. But because of this um consistent movement to the downside over the weekend, I'm looking for a price to go against that 30%, 50%, and then to find something in that range that might be a better area for us to get short at. Ba, 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 ba. Yeah, we've turned over in this imbalance. I don't know why this level is here. It should be here as 10 a.m. Oh no, 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 no. This is the macro. This is the beginning of the macro level. That's what that is. Makes sense. Makes sense. Okay, everybody. Hey, 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 everybody, calm down. Calm down. It's okay. It's okay. It's okay. Okay, so we turned over. We popped up here at 9:50. All right, the beginning of the macro. Now, what does this mean? What does this mean? Does this mean that this small impulse to the upside, as we've run directly into the first presentation fair value gap, does that mean that that's all of the movement we're going to get in the macro? All right. Does that mean that's it? Bink. This little pop, like bink, like bink. Right? Is that it? Or should we expect something more from this that's going to give us something a little more decisive to sink our teeth into? If the market is extremely heavy and it just gives us that and it has no intention of going any higher than this because it's done with the higher prices, then yeah, then we're looking at an opportunity to get involved here because price is saying, look, we are not, we're not going to even think about giving you levels higher than this. We're just going down, right? Like no one's at the helm, right? Like no one's at the helm. We just set it and forget it. And I'm inclined now, after I've said these things out loud, I'm inclined to say to myself, do I want to get on board right here? Do I want to get on board? After we've did that, we ran to that first presentation fair value gap, and we rolled over, hit the consequent encroachment of this imbalance, and then we've dropped a little bit. Early in the macro or later in the macro, right? Earlier or later? Hmm. Let's see what happens. Again, like I said, I'm waiting for 10 a.m. And I have waited for 10 a.m. before. And by the time 10 a.m. came around, the market had completely shifted to another hemisphere. It happens. But I don't want to start this week off with I don't want to start this week off with heat checks, right? Heat check, for those who don't know, is when you're playing basketball and you take a few shots and they fall, and then all of a sudden, outside of your normal range, you pull it, right? So your free throw line, right? Layups. Oh, I'm hitting 3-pointer. Oh, okay. Hmm. Oh, excuse me. And then the next one's a runner from the 3-point line. Oh, I hit that one. And then you say, wait a minute, is today the day I'm gonna go off, right? I'm going off today, right? Heat check. this and these two touches, this breakdown, yeah, I think maybe the best part for the entry, I think I allowed it to get away from me. I may have allowed the best part of the entry to get away from me. Mm-hmm. I am still not ready to get involved. But it's getting closer, right? It's 9:54. We're getting closer and closer to 10 a.m. Anything that's happening in this range has my attention, has my full attention. But you said 10 a.m. Yes, I right. Yes, yes. But I also, when I say, hey, come pick me up at my house, does that mean knock on my front door? Does that mean pull up to the street in front of my address? Does that mean pull into my driveway, right? Does that mean honk at the stop sign, right? Uh, Technically, all of those places are at my house, right? So if the market is in a hurry, it's going to tell you, hey, do not knock on my door. If the market is in a hurry, it's going to say, do not knock on my door. If the market's in a hurry, it says, do not pull in the driveway. Do not turn the engine off, right? And so those are the signals or the signs that we're watching for in the market if it says those types of things. But it really didn't move away from this. It really didn't move away from this area aggressively, did it? Like this impulse was extremely exciting. It moved it right. It moved there extremely rapidly, extremely quickly. It moved there rapidly, extremely rapidly. It moved there quickly, and then we dropped down, retraced to that level, and then we moved down further. That's, I'm telling you, I'm telling you, and I know that the market is bearish. There's no ifs, ands, or buts about it. Why I'm not shorting right now is because there are these clean levels here, or these weirdly clean levels that we have here. I think this one's probably the best opportunity for the pre-market. Just a slight run into, was that even London? Into the post-London price action. But along this level, there's so many um areas of interest for me personally that, in vigorous price action, I could imagine that we would return to, but bearish nonetheless. But we would have these impulses back to these areas to take out some of the liquidity above those zones before we would really begin to just deliver to the downside, right? Before we would just really just go, 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 go. Um, Now, looking back retrospectively, we could look at last week's consolidation sort of price action as we dropped down, we ran up to this level, we dropped into the low of this imbalance, we popped up, we squared encroachment, dropped down to the low, then began to kind of bleed off. If this were a 1 minute chart, and there was this type of an imbalance, and we did this, I would think of it as if we erased all of this and we just had just a bearish fair value gap, we just dropped down, dropped turn into it, and then we broke down below that level. We took this low out here, slight impulse to the upside. Prices muddily and slowly bleeding to the downside. This is one of those days where you'll look up and a candle longer than your screen will be up there. And you'll say, how did that happen? It just inchwormed its way all the way across the screen. And everybody's like, yep, it sure did. What did you do? Listen, what type of risk would I have here if I attempted to enter this trade? Nope, that's not what I want. 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 Stop loss. $100 up here. $100 stop loss. Uh, TP. $100 TP. Time is 9:59. 9:59, then we stopped right here in this area. We dropped right down into this level at 9:59. So at 10 a.m., this is exactly where we are. And where is that, Jimmy? I don't know. I believe that to the left, we've taken out this low. Sorry, we've taken out this low. We've taken out this low. The next low is here. So we've taken out these significant lows, the one, two, three, then there's one more here. And right at 10 a.m., it looks like we're going to just fall down and hit them right below that level. That's a fine how do you do? Mm-hmm. One of the things that happened prior to one of the issues that happened prior to me blowing my last funding account was a collection of days where immediately off the open I was trading very sort of conservatively, just taking my time, was looking at price action, I was measuring things out. I didn't really want to get involved too soon, too fast, too early. Didn't want to risk a lot. But those days moved crazily, right? They moved crazy. After that, then we had tariff news, and then we had tariff news again. Um, and this is exactly what those prior days look like. It's a slow, just sort of a molasses movement into a just a waterfall. It was just like slowly moving to the edge, 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 and then bam, gone. So at 10 a.m., normally we would be looking for our silver bullet. What I would really love to see would be this representing as a 5 minute fair value gap, may or may not. Breakaway gap, possibly. Slightly roll over to the upside. Nah, nah, nah. Should I put the 79 at risk? At risk of what, Grady? I don't know. I don't know. So I have an order here with $79 of risk. We have a few minutes left in the 5 minute candle. On the higher time frame, we're approaching this low very rapidly. Hmm. Seems like a ridiculous entry, actually. My logic is, my logic is that we would, in the next 50 seconds, Or in the next candle, we would run the high of this down of this 5 minute candle, and then we would do what? Trigger our entry. Then we would move away from this area to the downside. Mm. Mm. Okay. All right. Don't think about that. I don't like that idea. Could be accurate. Do you know what it could also be accurate? It could be accurate. Accurate. All right, we have 15 minutes left. We have 10 minutes left in the 15-minute. What are the odds that this 15-minute candle closes bullish? What are the odds that this 15-minute candle crosses this gap? Right? What's the probability that we're going to completely cross this gap on the 15-minute chart with our stop loss sitting right here in the middle? We put a wick in the premium of this imbalance and then move to the downside. How much time do we have left in the hour? Oh, the hour just started. The hour just started. Now, right now the motor and now the engine is turning. Now the engine is turning, and because the engine is turning, I'm going to try to find my mouse here. I'm going to remove this order. Remove this short. This remember, this is Monday. This is how sometimes a lot of us trade on Monday. We're not as sharp as we think we are right now. Mm. So normally my entries call for trading from the closing price of the current. Like if I'm short, I would like to look for the closing price of that current prior hour. Did not do that. We ran right back to it here and touched it. So we skipped that. Right. What's important about me not following my normal trading process? Hmm. The importance is I didn't trade a different process. I didn't take any trade. So no trade, no loss. I'm watching to see whether or not price is consolidating or whether or not we're respecting levels, whether or not we're deploying to the downside, right? Right. So not taking that trade is right in alignment with what I wanted to do. Not come in and pull triggers. Oh, it hit the first closing price of the first hour. I'm getting in. We watched and waited. We're following our game plan. Uh, and I'm really talking to me, right? I'm really talking to me because I am consistently reminding myself of what I'm doing and not what I want. Just watching this price begin to kind of slow here with resistance. So it's just a little bit of resistance. As price drops down, we pull back a little bit, move down, pull back up, and turn over again. Ooh. Excuse me. And these are the days that I really, 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 really agonize over later. Because it's one of those doing the right things, leaving me out of the movement, right? Because for all intents and purposes, except for this initial pullback here at 950, right? The beginning of the macro, right? Which turned out to be the end of the macro. The beginning of the macro here, this level, aside from that sort of pullback, price has been basically one directional, easy, right? Mhm. All of our pullbacks have been on a minute time frame or less. So on the higher time frames, they're just down close candles. I mean, you guys forgive me. I mean, I don't know what's going on with me today. If every I mean, I'm yawning. I'm trying to catch my breath. I'm hiccuping. I just, it's, I don't know. I don't know. I don't know. I don't know. And I'm just thinking. Right. And so this is the thought process that I was having earlier. Because the hour opened like this, and then we dropped down first, I was thinking, what's the probability that we are not moving lower from here, but this is the wick of the current hour, right? Um, we we will see. What am I trading? Micros, right? It's a large range on the micro. 'If I told you the truth about this particular trade, this does feel like one of those trades where I'm saying to myself, let me take a quick stab at this to see what happens. That's exactly how this trade felt. Except looking at these the three down close candles on the hourly, and then this candle opens up, and then its movement is to the downside at the beginning of the hour. And then in the first 10, 11 minutes, we're moving in this particular direction. Any other candle, just if we look at the prior hourly candle, we were creating the wick in that first, right? We were creating the wick in that first 10, 15 minutes or so. Um, we're creating a tail here, right? Creating the tail of this hourly candle in the first 15 minutes. We're hovering around our entry. That alone um is interesting, to say the least. 11 seconds left in this 1 minute candle, 2 minutes left in the five. This could just be a very quick retracement back into this imbalance that we were looking for above this level, or this is all it is. Nah, that's all it was. It was just a pop up on the 5 minute candle just to put us in this small imbalance above us. So what did we say earlier, right? So we were looking at this green level as the breakaway gap. Then that would mean that this could possibly be the fair value gap that we wanted to target, right? So breakaway, fair value. We just traded right above on the 5 minute candle. We just traded right above this wick, and then we turned over and dropped right back in. Um, I don't know. I think I should close this out. I don't like this. This doesn't seem to. We dropped right in and hit this down close candle. We popped up, but we aren't. right? We aren't holding price up. Price isn't being held up, or we aren't moving away from this. We dropped in, no move away. We dropped in, no move away. And there we are. Yeah. Ugh, it's disgusting. We went out to lunch on that one. So, so what is this? What does this mean then? What is this? All right, what does this mean? It's interesting. I mean, my stop loss is well down here. We rejected here. We came back in, retested again, rejected again to do what? What? What is this? Hmm. 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 All right, so 10:15 a.m. Took our time to avoid any level of drawdown. Immediately stopped out on our first entry. Breakaway gap, institutional order flow entry drill, and then a nice little rollover. I hate these days like this. You can't really gauge it. Dang it. You can't really gauge it. Can't really gauge. I can't really gauge whether or not if I decided to get short here. If I decided to get short here, right, which makes plenty of sense. Obviously, that would be a nice little move to the downside, right? And the issue that I'm having is wow, wow, wow. Okay, great. On the higher time frame, when are we going to run this into back into this gap, right? Like when, right? So what I find completely distasteful. Or at this gap created at 10 a.m. We just ran into it here. So that's for everybody who wanted to know. This gap was created at 10 a.m. on the 5 minute chart. Here we tapped into it once, we tapped into it twice, and then we dropped down. I believe that's what we call a silver bullet. Is there any chance that we would invert that gap? I don't think so. But does that mean no? No, that means that it's not registering to me now why we would invert it. Hmm. Let's see here. All right, hang on a second. I'll be right. All right. Okay. So, okay. So, what did that little break teach us? All right. What did that little break help us with? Well, the first thing I thought when I got up and I walked away from the computer, excuse me, is that I was pressuring myself. I'm pressuring myself right now to do something that the market is not going to allow me to do. Right. I'm pressuring myself to do something that the market itself will just not, it will not allow me to do. It's not here. It's just not a thing that can and will be done today. And what is that? That's I can't impose my own will on the market, so I might as well relax. All right. I can't impose my own will on the market. I might as well relax. Okay. All right. So, what is the other thing that we've done to help us relax? Well, we're trading the micros, which is not free money, but we've reduced the risk down to acceptable levels where if the market goes our way, it's wonderful. If the market goes against us, it's wonderful. Fine. We can deal with it, right? We can deal with it. So what we want to do now is after we've allowed the market to process for an hour now, now we can go ahead and start thinking about what we see and how we want to interact with the market today, right? Are we going to change our discipline? No. Are we going to change our strategy? No. Are we going to just spray and pray? No, right? What are we going to do now is, well, then what are we going to change if, we're not, if all those things remain the same? Well, because we're approaching it with less pressure uh, on us about all types of imaginal, all types of things that we're imagining that we would need to see happen on today. Then the only thing that we really can do right now is read price action. That's what we're going to do. We're just going to read the price action. We're just going to see where price is touching, where it's finding liquidity, and then where it's going. Right now, if we fall in sync with the market at that point, then we can probably say, hey, look, I believe I'm in sync with the market at this time. Then I'll take the trade. Um, and strangely enough, sometimes that happens after that first loss of the day. Then you find yourself a little more open to seeing the market for what it is and not for what we want it to be. And the market is giving me these weird imbalances everywhere, right? These gaps everywhere. Gaps, gaps, gaps everywhere. I was looking on the 15-second chart at this imbalance, this small gap right here in price on the 15-second chart. And the thing is I was noticing that we were trading to the low of it here and then here. We put a wick through it, then we turned over, we popped up above it, right? I also noticed that we have this level here, right? We have this level and we could pull that level all the way through, right? So we closed below it. Now we've closed above that level at this point. Now we've dropped right back down to this level. Let's see if we move lower here, right? Remember, this is the 15-second chart. So it's just the lower representation of the 1 minute chart. So then when we come to the 1 minute chart, what are we seeing here on the 1 minute chart? On the 1 minute chart, we see, yeah, we did close here. And then on the down close candle. And then we on the down close, we close here. And on this down close, we close higher. On this down close candle, we've closed higher. On this candle, we're just a little bit higher. Right? So that's what we're looking at. What do we see on the opposite side? We see this is the highest up close. We've respected that candle here. We respected it here. We've respected this candle here. Now this candle is rising and we've closed up here above all of these other candles, right? So there's basically relative equal highs all the way across. 1025, candle just kind of slid down us a little bit. So here, when we start seeing this process happen, we were thinking, right? Like maybe it's a possibility that we could get long at this area. The issue is that we're trading into this gap, right? So of course, if we're going to rise into this gap, we're going to start breaking that structure on the lower time frame in order for us to get into this position. Will this price send us lower or will it send us higher? Mm, mm. Oh boy. What a concept. The concept is that we just run these two relatively equal highs into this imbalance, and then we hit that the discount of that level, and we dropped it down. We dropped out of it. Now we've risen up, and we hit the low of it again. And the question that we're asking ourselves is are we going higher from this place, or are we going lower from this place? Right? Higher from this place or lower from this place? Um, on the higher time frame, it isn't giving us that type of clarity. It's just a small gap that we've just tapped into. So are we going to trade with the direction or against the direction? Hmm. If we were going to trade with the direction, right? We're already going down. If we're going to trade with the direction, then where would we put our stop loss, right? We would have to get short here, and we'd have to put our stop loss up here, above the gap, up above all of this, way up here. Are we okay with that type of risk, right? Are we okay with that type of risk? With a stop loss way up here, $83 stop loss, right? This is kind of what we're dealing with right now. Now ask yourself, is this is this the last is this the last entry ever, right? Is this the last one where everybody who's going to ever make money in the market has to take this entry or not? Is this the last one? And if the answer to that question is no, there's going to be another one in the next 15 minutes or next hour or so, then that should dictate how we approach the entry of this how we should approach this entry. Now, if this is the last one, right? If there are none other, there will never ever be any other trades after this, then guess what? It doesn't matter anyway, does it? Because what? You're going to take the trade, be profitable, and then what they're going to do? Shut down the market forever, right? So it wouldn't make a difference. Who's going to pay out? What broker's going to pay out then? Well, we're out of business anyway, so we'll keep what we got, and you can come find us. All right. But we traded right back to this level. We also closed higher here. All right. Now we're trading here. Now we're respecting this high. All right. So now we're respecting this high. We have not closed above this high yet, or at all. This is the last minute of this 5 minute candle. We move back up into this level. So we have this tiny micro imbalance counter sunk with this larger imbalance. Does that makes sense? Counter sunk. Juxtapose to, you know, English, a lot of words. Juxtaposed to that at 10:29 a.m. Are we expecting a reversal at this point? Out of the blue. Just some out of the blue reversal. I'm not quite sure because we've just taken a higher time frame low that we set up on the 10th, Thursday the 10th. We've just taken that low, or really we've just kind of right matched it. So taking that low, there is a little bit of liquidity down here. Do you think we could move much lower? Is the question I'm asking myself. Could we move a little bit lower, go for a little bit more liquidity after we've taken out all these lows, right? Mm, I'm a little bit of a counter trend trader. Have that as a major thing about myself. Is that I am a counter trend trader. I'm looking at this chart and saying go long with the counter trend because we've just taken all these lows. We've taken all of these lows, and let's on the higher time frame, let's see what happens after we've taken the higher time frame lows. And I know that the trend has been to the downside all morning. Now, if market's going to fail, it's obviously going to fail here, right? If we're going to continue to go lower, it's obviously going to continue to go lower. At this point, I could not ignore those lows being taken. That's probably my big mistake of the day. Early on, I wanted to see us get down to that low, get down to these levels. I did not imagine that we were going to just immediately come down and then take those lows out. But there isn't aggressive or intense reactivity to taking these lows out. But retracement back into the range was something that I was talking about earlier. And then the market is going to show me, Grady, no, buddy, we're going to go much lower than these prior down close candles at this point, referring to 1 hour and referring to this low that we just took here. This is the low I'm referring to from Thursday the 10th. And we just ran that low and we took the liquidity out below that level. And I got long, not literally at the low, but I got long way up here as we began to move back up higher. So that was sloppy entry on my part. And then I used this small little gap, not the first time, second time, or third time at all. My entry is way up here. But again, we just took those lows. And if we took the lows below that, am I early? Yeah, I am. I am. Oh, and it just stopped me out. Gosh. Truth be told, with this being the level, the area that I should buy at anyway, even though we're doing this and we're moving lower. And man, doggone it. There's a lot down here. And I think maybe the issue is once we've taken this low, we swept this low, maybe I'm thinking to myself, look, if we were going down here, where would I even put my stop loss? That's the major question I'm asking myself. Like, where would I even put a stop loss if we were going to drop down into this gap between this daily low level and the what I want to call the opening price of this down close day here, from here to here. Lows are still respecting. Don't do it. 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 Come on now. Don't do it. What? What? Just came down to stop me out, and then you're gonna go because my stop loss is right here. Just came down and hit my stop loss. That's great. That's great. 29 seconds left in the 5 minute candle. I've lost a lot of money trading reversals over and over and over throughout a day. And I listened to a piece of a podcast the other day talking about how sometimes we'll get into these thought processes and then we'll get locked in and we can't think our way out of that thought process. It's not something that we're like saying, oh, yeah, I know what I'm doing wrong here. I can think my way through this. It's as much, dang it. Ooh, you hit the low that up close candle. It's as much out of our control as it is, right? As it is something that we are conscious of happening, but it's also at the same time, sometimes it feels like it's out of our control. Just this idea that when I see a level take out lows like this, I go into I'm gonna catch the falling knife mode, and I want to catch the bottom to ride it all the way back up to 50% retracement, of the total range or whatever. which is easier said than done, as you can see, because I think yeah, at this point was trying to catch this long off this level multiple times, and now here we are. But the two levels that I was really, when I started saying, hey, let's do price action reading and see if we can get involved, this was the level, but I never took a trade here. By the time it began to move away, I took that as confirmation. Even as this market trying to drop back into this level and pop back up, I'm like, okay, that does seem like confirmation of higher price action. But this is such low to lower time, low, such a low time frame. Here, I'm back to um, I'm back to mitigating the idea of just chasing price, right? So now I see it moving in my favor. I'm just sitting here watching it. This is the movement that I was expecting. Now that I see it happening, you tell me what it means, right? You tell me how I should you tell me how I should approach it, right? That's great. How should I approach it now? Right? How should I approach it now? You tell me how I should approach it. Then we had this imbalance. We dropped down, we touched the low of it, we ran to the middle of it, touched the low of it, traded away, low, all the way through, consequent encroachment, touching the high of it, right? So what are you going to tell me? Inversion? We're going to invert this and move to the downside? Mm, let's go. Okay, we're trading to the closing price of that 5 minute candle, 5 minute up close here. Close of the 5 minute up close candle. Touch that level. Do I think we're going to run this high into the gap above it and then move down? It's a possibility. Mm, yeah. Hmm. This is almost my trading model. We're in the wick of this 5 minute candle at this imbalance. The hard part right now is waiting to see whether or not I have confirmation above this level, right? That's the hard part for me. Do I have confirmation above this level? Once I took out this high above this range, where do I wait for confirmation? Where do I find confirmation? And the hard part is if I wait for confirmation and it immediately collapses, right? I'm behind the trade and I'm trying to catch it at that point. If I go in now, let's say we just took this high. Let's say I go in now. Now I'm looking at this green level that I have here. Let's say we could just place a wick right above the high of this candle here, right? We could just put a one wick just above this candle inside this gap and then move down from there. The part that really is getting on my nerves is the idea that even this retracement, if it's a retracement and not the move of the day, this retracement was basically all I was looking for, right? No, well, that's 70 points right there. That was what I was looking for. But we'll see if we can get into that level. right? So we got tickety, tickety, tickety right here in the lower time frames. What can I do? What can I do with it? Slight pullback on a long-term downward move. Slight pullback to the upside. Okay, now we're pushing. After we took the lows out here on the higher time frame, then we move back into the range. Small imbalance here on the 15-second chart. We're up here. It looks like we're trying to trade into that small little gap right there. Now I am watching the 1 minute because although the 1 minute is a small time frame compared to the second charts, it could go on forever. Did we respect the high of this up close candle? Well, there's 40 seconds left. 2 minutes and 34 seconds left in the 5 minute candle. Okay. That type of movement to the downside is encouraging. It's not enough. What I mean by that is we just hit the high of this gap that we inverted. I would need to see us move all the way through this, trade through the range, attack this from below, and then move to the downside for complete confirmation of inversion. Now running that prior high, I thought that was really good. That was really nice. We're inside of the imbalance that we kind of outlined in a sort of a copper color. Consequent encroachment. Now we're through. Yeah, we're at the low of that gap now. Small imbalance right here on the 1 minute. My thought is this. I mean, I don't have a lot at risk there, so my wins and losses in this particular um on this particular day, trading day, are manageable, right? They're manageable, but I don't see a reason why I would let this go into drawdown. We came all the way back here. What would be the reason for me to allow it to come past my entry, stop me out? So what I'm going to do is I'm going to take away that option. I'm gonna move this just to break even here. If we run both of these gaps completely, then you would see where the issue would be in this trading day. If we ran both of those gaps. Now run it back to this level, turning over consequent encroachment. That's beautiful. I'd like to see us continue lower then. We have 3 minutes and 41 seconds left in the 5 minute candle. A lot of this price action reminds me of how, it reminds me of just normal trading, actually. Normal trading price action. We don't have, 1 minute candles that are 300 points and stuff like that right now. So this seems doable. It seems like normal price action. And basically I'm looking for us to take the lows out down there. I need to move my stop loss so I can see that right there. That's fine. Where the right now what I'm watching is this is what I'm watching now. See this lower close and then this lower close and then that low I mean this higher close, higher close, higher close, this higher close. So this close is this low is below this close is below this close here. So I'm still watching that to see whether or not we're staggering the closings of the down close candles. Blah. I'm watching to see if we're staggering the closes of the down close candles, but they're still rising, right? Meaning they were closing below some down closes, but the next time the down close candle is higher than the prior section of down close candles, right? So it seems as like, oh yeah, price is moving lower, price is moving lower, price is moving lower. But what it's actually doing is it's making this sort of a gradual consolidation higher, right? So it's just like, oh yeah, we traded to this gap and we turned over and we dropped down, right? Yeah, are we? Or did we break market structure and then the next time we drop back in and then we just close a little bit higher? Because I'm still looking at this red line as we've just run the low of that higher time frame candle. And right, so because we've run the low of that higher time frame candle, did we exhaust liquidity? Right? Is this going to be a sweep, right? Or are we just going to dip in, take out levels, immediately absorb whatever liquidity is available there, and then take off? All right. Okay. I think this brings us to a little below, a little below break even on the day. It's hard to decipher what this says, right? I'm up $20 on the day. If I were to cut now, I'd be up 20. Now this makes little sense to people who don't trade on a regular basis. But for those of us who trade on a regular basis, this is the reason that we want to avoid drawdown early on in the day. When your trade finally begins to go your way, you're paying commissions and you're also well I'm trading again my top step prop firm combine, but you would end up being trading commissions and you're ending up working against your drawdown. So if you have $100 of drawdown, um and you've gotten there through multiple trades, you could be down $100, and then your commission fees would be $20. So you're down $120. But then to make the next trade and to end up profitable, you don't need to make $120. You need to make $120 plus the commission for your current trade, right? So it becomes this landslide of if you do not allow for discipline, right? And right now, I'm in that weird mode of cut it, like take it, right? You know what I'm saying? But that's not what I'm gonna do. What I'm going to do is I'm gonna move my stop loss down just a little bit to here. and I move that stop loss down. Why? Because I am working my drawdown, but I'm also working the trade concurrently. I'm doing two things at once. And then I'm still reading price action because I'm looking for obvious levels or obvious reasons where I would think, wow, look how prices come to this particular level, like this small imbalance that we saw earlier. And I'm watching where the bodies are closing. If the bodies are not closing below consequent encroachment, and the only thing that I have down there are wicks, my eye is coming to that saying, okay, look, like, okay, Grady, what does it mean, right? What does it mean if we're closing inside of gaps, but we're respecting consequent encroachment or we're respecting mean threshold, and we're not closing above or below that range? It could be a signal that we are not going to continue in a particular direction, or we are going to move in a particular direction. This trade has been playing very well so far. We are in a high resistance zone. High resistance meaning that once we broke down below this level, price did not just pour, right? It began to churn again. I think what we would expect to see here is an expansion to the downside, creating a 1 minute imbalance down here as we reached out to the next level before our sort of next pullback, right? Now below us we have a large gap imbalance. Below this level, we have this large imbalance on a higher time frame. Now we're sweeping this level. So just because this red line is the prior low in this imbalance, and I have the screen kind of tight here, so I'm just opening this up just a little bit. So between this red line and maybe here, down close candle, we have this range. It's one candle passing this way. Prior to that, we have these expanses of candles. Then we have this prior gap down here. Then we have liquidity below here and liquidity down here. Very difficult to see. So I'm going to move to the 2 hour chart so we can see if we can get everything on the screen in a better way. Yeah, so this is what I'm referring to. So we could look to say, whoa, we're going to drop down below this level. We're going to sweep the low on this level, hit this gap and move to the upside. Or we would hit this gap, sweep down below this level, and then begin to just descend rapidly. We don't see that, do we? We see that we've come here and now there's a lot of resistance and our candles are turning on us and going back in the other direction. We'll move back to the 15-minute chart. There's that small imbalance there. Now we've left this. We did not move our stop loss to actually on this zone. I don't need to move it down. I need to move it here. So this could come up and stop us out. That's fine if it does. Yeah, that's fine if it does. But if we consider this to be an inversion gap, we would need to see us tap the low of this level or come back into close proximity to this level before finally making our distribution to the downside. Because we passed through it to the upside, then we passed through it to the downside. Then we would need to come back to it and then sort of reprice to it as a regular gap, as we would a regular gap, and then move away from it. That might take a while. So we're going to sit tight and just kind of hold our position here. If price took off and ran to the upside, yes, I'd say to myself, doggone it, I could have broken even on the day. But even that is an issue for me sometimes because I don't want to overtrade, right? Right. And so if we don't want to overtrade, it doesn't matter necessarily whether or not we break even. The most important thing is whether or not we remain we remain I'm sorry. I want to say something, but I'm watching price to make sure that I am aware of what I'm looking at and not just staring at colors. Now that we've come into this level, where would I imagine I want to get out? I just really don't want to see it go above 50% of this level. I don't want to see it go into the premium. That's why my stop losses are just outside of that. Why? Because maybe it'll do it just to upset me. Right? Right? Because the computer's watching me. Um, right. So maybe it could do that just to run into the premium and then move to the downside or whatever. Right. So it could run to the high of that the prior up close candle. We could run to mean threshold of that candle. Or we could just blow through all of this and start a journey to the upside that we're all none of us are really truly expecting. Um, we have 3 minutes left in the 15-minute candle. Okay, we just touched the low of that box. Okay, we just touched the low of the box. Now, I was calling for this, saying that we should touch the low of the box and then we should move down away from it. All right, we should come back, address it one more time, touch the low of it, and then teasing us, teasing us. It's like one of those. It's like a game show where they say, "Hey, what's the answer to number 15?" And you say 22, and you say that's right, wrong. You're like, thank you, thank you for playing. And so we tap the low of that box, and let's see if we begin to distribute to the downside, or whether or not there's more activity to be held here. One of the things that I noticed last week is that whenever we consolidated around a gap, it was an extensive consolidation where we touched the gap multiple times on the low, multiple times on the high. I'm not asking for that right now. I would really like to see this 5 minute candle right here just melt. Just melt. Just just rise up here, touch this, and then just melt. That's exactly what I would love to see happen. Because I've been trying to be a good boy. I'm trying to trade with the trend. I'm not trying to go counter trend like I normally do. I've had issues with it. I confess, I've had issues with that counter trend, but no, I'm trying to trade with the trend this time. I'm trying to trade with the trend, and it's gonna punish me for. Yeah, okay, 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 okay. All right, 1 minute 13 seconds left. So yeah, so normally I'm counter trend, and when the market is moving in one direction and has been for a while, or it looks like it's obviously bearish, I've had a tendency to attempt to trade the reversal over and over and over and over again. And I'll sit there, and every time it would pop up like this, I would go long, and then we would be in this type of price action, and then it would just go lower and lower and lower, right? And then it would go lower and lower and lower. And it's because I try to just counter trend trade at the wrong spot at the wrong time. But it's 11 a.m. and that time of day has me concerned. That time of day has me concerned. Not this price, not this level. It's just the idea that the price was held and has been held at this point until 10:59:46. Let's see what happens at 10:59:46. At 11 a.m., we got 5 seconds left, 2 seconds left in this 5 minute candle. Hmm. I'm okay with it. I have to be okay with it. There's consequent encroachment in that gap. I have to be okay with it. Whatever is going to happen is going to happen, right? It's not, you know, it's, yeah, Yeah, I mean, what are we gonna do about it, right? We're traders. What are we gonna do about it? We're holding, we're holding, we're holding, and we're holding, and that's what we're supposed to do. And if we do that, sometimes we're holding at the right point. Sometimes we're holding at the wrong point. And that's the nature of our ability to, you know, gravitate through this particular market. That's the inside level of this down of this gap. Just slid out the bottom of it, lower time frame. 3 minutes and 27 seconds left on the 5 minute candle at 11:01 a.m. I need to tighten up the bolts on my chair. Oh boy. Okay. Whatever this lower time frame imbalance is right here, do you see why sometimes just it is just mm, it is just you saying to yourself, but and then it's just like it's like wait a minute, but right? So you see this area that has this sensitivity, and when price comes directly to that level, and it just happens to be just below of that higher time frame candle to the left, and we drop right back into it, and just once, and then twice, and then three times, and then four times, five times. Well, literally, then the sixth time, then the seventh time, and then the eighth time, and we're saying to ourselves, "What's up with this resistance, right? Why is there this high resistance at this level?" I couldn't explain it. Couldn't explain it. And again, because we are still here with this resistance, I still feel like we're not out of the woods, right? We're not out of the woods. We're at the edge of the woods. We can see Granny's house. The Granny's house is across that field, right? So we have to run across that field to get to Granny's house. And if the big bad wolf run us down before we get there, then right. So it's not quite time to eat, apple pie. No, I don't know what I'm saying. I don't know. I know it's not time to eat apple pie, right? Everybody knows that. Come on, guys. We got to get to Granny's house first. And this thing is just all of these levels, all of these like, right? So we're all in this range of equal levels at this particular point. And how many times have we seen price come into a level like this, practically consolidate sideways, give every indication that it's going to go lower, refuse to take out the prior lows, close just a tick higher than the prior down close, reverse some price, and then go the other way. And aggressively. Not like, oh yeah, I thought about it. I thought about it. But no, but aggressively just rocket ship off of this sort of a flat level. Two standard deviations off of the London range. Two full standard deviations off the London range, and we're sitting here bottoming out with with the level being 17, right? 17 9 1850 on the Nasdaq, and then we turned right over at this point and started moving back to the upside. How many times? How many times do you need to see it? I don't really want to see it today. I mean, I don't really need to see it today. What I really wanted to see was that if we had a gap like right below this imbalance, that we would trade to this gap would hold, and then would send us lower. Like the first imbalance off of the move to the downside or whatever it is, the inversion fair value gap. That's what I would love to see. That's what I would really, really love to see. But one more touch One more touch of the low would be fine. One more touch would be mighty fine. That's what it would be. One more touch just to say, hey, hey, farewell. I'm going on a long journey. I just came back here to touch you one more time, shake your hand, put my arms around you, tell you, that it's been cool. And then I holler at you. Right? I holler, right? That's what I would love to see, right? Just run up there, touch it one more time to say, I'll holler at you. I'll holler at you, y'all. Right? And then hops on the train. Um, wait a minute. Wait a minute. Wait. What are you doing coming back here? You told me that you were going on the last train to Boston and you'd meet me at the station. Where's the last train to Clarksville? I'm sorry, guys. I know that's terrible. That's terrible. I would call it Americana, but it's a British group. Go down. Get down. Get down. Now I'm saying it, right? Now I'm saying it. Now I'm saying it. Now I'm saying all of those types of things that I say to myself are red flags. They're red flags when we start begging the market, when we start bartering with the market, when we start begging the market. All of these are red flags. Not about the market, but about the trader. That means that the trader is allowing particular types of emotions to manifest, right? Because you first you're clenching up. Then what are you doing? Your breath is changing. Then you please, right? Talking to a machine. Watch the trader. But what well, I did a video last week and I really should link in the description. What it's called is what was it called? It was called Worn Down. The market wore me down last week just prior to Fed Chair Powell's speech. And then it consolidated, and I tried to get short, and I tried to get short, and then the last trade, I put up a marker of where I think that it would have been a great place to put a short. And when I came back to the charts the next day or later that day, the market had moved so far away from that particular point on that entry, and I said to myself, "Oh, the market just wore me down." Just went back and forth and back and forth and back and forth and back and forth. And either through my impatience or my overeagerness or whatever the case was, by the time it was time for the market to, fully develop and expand, I was already spent. I was exhausted. I'm mentally exhausted, emotionally exhausted. And it only did it by what? This weird indecision. It's back and forth and back and forth and back and forth and back and forth. And so what exhausts us more, right? What exhausts us more? Is it the anticipation of uh, um, expanded profits, right? Is that what it wears us out? Is it sometimes when it comes in extremely close to our stop loss, is that the thing that wears us out, right? So that we work ourselves up and then we right then we work ourselves up and we work ourselves up. Perhaps it's just being stopped out, right? Right, we get stopped out, break even, stopped out, break even, stopped out for a loss, stopped out for a break even. Yeah, I think it might be it's a combination of a lot of those things. This flat bottom of down closed candles is, yeah, I think it was the sign that I was looking at and looking for to say, you know what, guys, it seems as if that, price is going to turn here and go against us. But who could get longs off of this though? Right? Who could get longs off of this without being stopped out multiple times? Right? I wouldn't even want to. I really wouldn't want to. It's just too much. It would be too much back and forth. It's too much. Because if you were long at this area with your stop loss below here, then we've come back into your entry 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 12, times, right? That's not good either. Those people are exhausted as well. Those people are exhausted as well. Now we're going to move back toward the low from the 10th. We're at the low of the 10th again. We've moved below that level multiple times. And then we moved back above it. Are we pulling in liquidity above that level? Right? Is there liquidity above a low? Is that how that works? It's not how it works, is it? It wouldn't even make sense. I can imagine liquidity above highs, but maybe there's some high that's associated with this particular low in the past as well. Nope. Did somebody turn the market off on Monday? Hmm. That looks like the reversal issues that I was really truly afraid of. The pop up, close above the prior up close candle. What happens with this down close candle is going to tell us the entire story of the rest of the day. We just drop right back into the down close, the opening price of this down close candle. We touch it, and then we pop up. What we need to do is run below it and close. We go down to the wicks of it. We need to keep going down. Boom, 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 boom. My choices now are small losing day or break even. Small loser or break even. I can choose now, or the market can choose for me. That's good. 1 minute, 48 seconds. Brick wall. Brick wall. Oh boy. What are we gonna do? What could we possibly be holding for? 15 minutes after 11? Okay. That impulsive move to the downside. What does that mean? Uh, I don't, uh, we're just watching now. Okay. We've taken out the prior low of this current setup. What is it that about this that I'm concerned about now is what? Well, the macro here just closed at, let's see, the macro closed at 11:10. Boom. And then we finally made a little bit of movement to the downside. That movement to the downside representative of a reassumption of the direction of the market, or was this just to run to the terminus rapidly, and then an area where price would invert and turn on us to run much, much higher. So it's like the concept of a low and a lower low, right? You make a low, then you make a lower low, then you make a high and then a higher high, right? So that's the prior low. We closed down here, wrapped up, closed higher, and then we pressed higher. Mm. We would like to see us begin to move lower. We want to see lower movement in the market. Lower movement in the market. Today looks like a small winner. It would not be enough to qualify as a $200 day for Top Step. Watching this level to see whether or not we come back into this range. Honestly, I should move my stop loss down to here. Why? Because I want all of this. I want all of that. I want all of this. Yep. There's a small imbalance right here on the 1 minute chart below this gap. We traded to the consequent encroachment of this level and then we broke down. We traded up to this level, but not into its imbalance. So that looks like a breakaway. Here's an up close candle. Then we've begun to slide lower, but it's not confirmed as a breakaway until I get down here and I close on the 1 minute chart. So 26 seconds. Just to have that sort of a drop and then have price sit, right? You know what I'm saying? I'm thinking, okay, we ran to terminus. We hit the level that we wanted to hit in order to turn and change direction. That's what I'm seeing currently. To run into the lows of these candles and hit any of these types of lows, all that stuff will also makes sense for us to move lower. Our stop loss placement mitigates much of our drawdown that we had early on in the day, so it's basically a break-even day. Right now, what we're trying to determine is whether or not we're going to go into profit for the day to a greater degree, or whether or not we're just going to kind of close the day out and you know, say to ourselves, well, we bought lunch. We went out and bought lunch, and so our account is down, to 2 orders of 2 orders and Five Guys. I don't like that. I mean, again, stop loss is in place to reduce the amount of drawdown we've had on the day. If it comes all the way back against us, I don't know what I would like to do. I don't think I would want to get into another trade today. Because in midday at 11 a.m., I really had no real true plan to go long for any extended range at this point. Even looking at the higher time frame levels, um, even looking at these higher time frame levels, because we dropped out into this area below this up close candle. Turning over and coming back into this range is not something that I really, really had considered as much as taking out, go running into this level, taking this level out, and then, getting into, deep into the premium at least, right? Just really kind of moving down and seeing what's down there. Excuse me. Looking at my stop loss, looking at this small gap in price here, and looking at this up close candle, thinking to myself, do I really want to see us go back into those ranges, or am I really ready for this 15-minute candle to have an immediate rebalance with these legs, right? I'm gonna call them legs with these wicks, turn over, immediate rebalance, and then really begin to get going, right? This is the 15-minute chart. One of the things that I debated about over the weekend was during the that range of high volatility. I moved down to trading micros every day, and I had been trading minis before, and I was thinking to myself, well, is it time for me to really start adding, more leverage to my trades? Is it time, right? Is it time to add that type of risk? And I think that what I would really need to do at this point, if I really was thinking about adding risk, is not going directly to minis, but begin to kind of move my way up through larger sizes, lot sizes of micros, and saying, look, if I'm trading a micro, I'll trade two micros, I'll trade three micros, right? Because again, when we're trading three micros at this level, you would multiply 160 times three, and we would nearly be at about 400 $500 in profit, from this in this short range. Now, take that and flip it toward our drawdown, and then you would see why I am still more patient with myself toward adding leverage, because today I've taken three trades, I think. Three trades, and in those three trades, I went one for three, basically, as far as extended delivery of price or being profitable. So would I really want this type would uh, would I really want to begin to accept that amount of risk, right? Really, do I really want to move into or begin to accept that type of risk? Because the more risk, the more drawdown. And I know, and then people are thinking, well, how are you going to make money if you're not swinging for the fences? And I think being in a rush to do that has really been the thing that's kind of gotten me to this particular point. I know for sure I can read price much better with low reduced risk. When I look at the chart and it says, "Oh yeah, you're down $25," it's very easy for me to read price then. When I look at the chart and it says that I'm down $650, it's not to the point right now where I'm saying to myself, "Oh yeah, this is fine." Like, you know what I'm saying? I'm not to the point where I'm like, "Ah, okay, great." Um, yeah. And another thing, and it's very interesting that when you're trading with a mini, how you could take three trades and your risk per trade is $150, right? Or your risk per trade is let's say $200, right? It is very interesting how you could take three trades and when you look at your P&L, you're down 800. That makes no sense. Three times. Yes, that's right. So you would think, oh no, I'm down 600. And then you look up at your P&L and you're down 800. I have no idea how that happens. But when you open up risk, that's the way loss accelerates. Emotionally, mentally, that's not how math works, right? I mean, logically, that's not how math works. Mathematically, that's completely impossible. We've been in this trade and it's come to this level and it's just begun to just do this, and I'm not sure what it means. We're coming into 11:30, and we finally kind of broken down below these ranges, broken below these levels, and it's just not opened up. It just hasn't really opened up. And that impatience is going to cost me if I'm not careful. That impatience is going to cost me if I'm not careful. Yep. So let's be careful. Let's be cautious, and just continue to watch price on the 5 minute chart. We just popped up to the opening price of that prior up close candle, which is here. We just popped up there. We touched it there, and then we kind of, we're working our way through this. We're working our way through this. Another thing about this is with when it comes to reducing risk is just sitting in a trade longer with lower chances of loss and lower chances of a win. Excuse me. It's it helps. It helps, right? So again, now this is for newer traders who haven't been through this, right? You've taken some trades and then you have no expectation. You do not believe it's going to go anywhere. And you've taken some trades and these trades have been amazing to you, right? You've seen the market just really move in your favor and you want that type of consistency on a regular basis. When you have an expectation for a particular outcome or a particular amount of money, or you have so much leverage on that you're seeing the price on the your P&L run up so rapidly, it does something to you psychologically. I'm sorry about that. There, I think that the dopamine release for a lot of us is far more than many people have can endure on a regular basis because it's just something that you wouldn't expect. It's like somebody, coming up to you and bringing you your regular 2 week paycheck on just back to back. Here you go, here you go, here you go, here you go, here you go. So the first paycheck, you know exactly what to do with it, right? The second check, you might have some logical thought process of what you want to do with that second paycheck, right? Oh, okay, yeah, I'll put this aside for this, and I'll put this aside for that, and I'll put this aside for this, and I'll put this aside for that. And then somebody taps you on the shoulder with another one of your current paychecks and say, here you go. And you say, wait a minute, okay. You say, okay, okay, okay. You say, oh, okay, okay. And then they come back and and I talk about this on a regular basis because many people don't understand the emotional seesaw that we as new traders go through. And so we think that, oh yeah, I would love to. And we're saying, yeah, yeah, of course you would love to. We would all love to. It's a great and wonderful thing, great and wonderful feeling. But you have to be prepared for success, which is much more difficult to deal with, I think, for me than even taking losses. I don't like taking losses, but having success is much more difficult because on days like today, success might be look at your favorite streamer who's or favorite streamer or favorite person who posts to the market and look at their sped up version of the trades that they're taking and look at that immense P&L. You have this green number stretched across the screen. They had to expand the little pad out in order to fit the entire number, right? But don't look at that. Look at how long the trade actually took to play out. 3 hours, 4 hours of them watching price go up 2 grand, down 2 grand, up 5 grand, down 7 grand, up 7 grand, up 10 grand, up 11 grand, right? So it's this thing where you just have to get comfortable being uncomfortable with the way price develops. All right. So we've mitigated our drawdown for the day. We've mitigated our drawdown for the day, but I do not believe that we allowed ourselves. We did not, and I'm gonna make myself clear. We did not allow ourselves to get in early enough to really participate in the meat of today's move. The meat of today's move up until this point happened immediately off the open, where we were kind of just waking up, and getting ourselves together, thinking about the market. Um, so we're gonna let this thing play out. There's not really much I could say. I could just keep going on and on and on about different things, which I'm sure it's fun for everybody. Let's see. Okay, that's great. Okay. Okay. Let's see what's going on. What I don't necessarily mind is I would not necessarily mind if price turns in one direction for the rest of the day. And it's rough. It's rough to deal with. I've moved my stop loss down just a little bit. Excuse me. That makes me feel a little bit. Mm, it's dealt with today's drawdown, right? So we would tomorrow we would open up basically the same spot where we opened up this morning, except we were able to kind of endure the back and forth of price action so far. Um, on the daily chart, what I was looking at, what I was thinking about was this level, the high of this weekly gap, and how we were leaving the low of this weekly gap, and we stretched out into this expanse between the two. That's the thing that I was looking at as the before the market opened. Because from this point we traded from below the mean threshold, sorry, the consequent encroachment of this new week gap. And then we ran all the way to touch the consequent encroachment of this gap. We fell, created this weekly gap, traded from the high of that gap through the body of it, consequent encroachment out to the low. We traded up to roughly the lower quarter of this new week gap. Then we expanded. This week, we created this gap, right? Below this gap, we created this gap just above this one. I'm going to say the word gap at least 15 more times. And then when we began to leave this gap, the thought process was closing the distance between these two ranges would be a possibility that we might see. This opening price of this down close candle on the daily and this wick are areas that I was looking at very seriously for rejection and or whatever. Now, again, this is the same levels that we're looking at on the other chart where we took out this low, then we took out this low, we took out this low and this low. Now we're here. So, what is it meaning for us? What is it gonna mean for us? So there's a bit of a wick that's just kind of formed on this day here. And as I noticed it, I was like saying, oh, okay, that's a bit of a wick here. So if we could get all the way down to that level on today, it would be possible for us. Yeah, it would be possible for us to get down that far. Um, but we'll have to wait and see. Definitely have to wait and see. Oh man. So the inchworm process is fine with me too. This is as much of a is as much of an inchworm process as there could possibly be, and because the inchworm process is so sustainable, is the best thing that we could hope for, right? The best thing we could hope for is that it would be sustainable. Oh, but I only made 150 today, and I need to have these consecutive $200 days in order to be profitable. Should I continue to trade? You're going to be responsible for your own account. You're going to be responsible for your own account. But if you racked up 10 days in a row of $150, right, and then you racked up 3 days of $200, and then another couple of days of $150, and then another couple of days of $200. By the time you were ready to withdraw some funds, you're looking roughly at about $1,500 that you could withdraw from your prop firm. Just being consistent like that, and then even having, let's just say your lowest days are $150, and you just say, look, I've hit my own personal trading limit, and I'm gonna quit. And then those other days are $1,000 days, right? So you have uh 5 days at $1,000, that's $5,000. And then between those $1,000 days, you have these $150 days where you just say, look, I can't, you know what I'm saying? I can't hit it today. Excuse me. That's gonna be a beautiful withdrawal for you. That's gonna be a beautiful withdrawal. And when I was listening to I listen to I see a lot of traders online that I don't necessarily trade the way they trade. I don't use their strategies, but I listen to a lot of their mindset and a lot of their mentalities as far as simple things like um Starling Effects was saying, we're trading so that you can have the withdrawal from your broker from your prop firm to your account. That's the reason that we're trading. And making it so basic, when I mean basic, I mean based, just this grounded, real life, 9 to 5 mentality toward trading, I think helps a lot of us not do those, not blow up and not have these tilted triggered days because it is as simple as I come to work to do my job. When my job is done, I clock out and I expect payment on a regular basis. In order for us as traders to expect payment on a regular basis, we have to trade in a way that's a regular basis. It's a way that's a regular basis. So reduce that risk, right? Reduce that risk if you have to. If you have to reduce that risk until you can understand what you're looking at, reduce that risk. Then when you get involved later, then you can say, I've taken this trade 300 times, right? I've taken this exact same trade. And when you're in the market long enough, yeah, you say like, man, this reminds me of 2022. This reminds me of January of 2019. And you'll say that this is very similar. When you do your back testing, when you're doing your research and you're looking at the chart, you say, oh, this does look like when we were in that area, and then we move from here to there. That's why there are moments when I'm saying stuff like, I remember when we hit this flat bottom, we trade sideways just like this. And then we just took off and reversed at a particular point. Because my subconscious is saying, yes, there are signatures in this price action that match previous days. Because there are also these days that we've seen price drop in, run the previous up close candle into a gap, drop down, trade sideways, and just pour over. Could I tell you what's going to happen in the next 10, 15, 20, 30 minutes? No, I can't really. I can't. Why? Because I do not want to trade from that sort of a mental space and a mental place. I really want to look at the chart and I want to trade from the visuals of what I see. Where I see this up close candle and I see this run of down close candles. This candle's wick is long into the body of this candle. This candle's wick to the upside is extremely short. These two wicks overlap almost as if they are the exact same wick inverted right through this range on the 5 minute chart, here to here, right? So this is what I'm looking at. Sorry, I'm trying to get this to move forward and then to move back, right? So in this range, we see that the low of this wick is at consequent encroachment. We move back up. We're in the premium. We hit the like the quarter level discount, quarter level premium, and then we move down. So that's where I really would like to be in trading is as price is still moving in my favor and in my direction, I am still reading price action to determine particular levels where we could come back to, where we could bounce off of, where are we in this overall range, right? So we've gapped down into this zone. The idea that I believe that I'm thinking of that, overall is if this is a nice little open range between these two levels, right? Between the low of this candle and let's say the high of this candle. Well, we're like a quarter way into the premium, right? Putting a wick down to the consequent encroachment of this level in the 15-minute chart would be a great thing, right? But this is a floor. Whoa, whoa, whoa. This is a 4 hour chart. So tapping a wick right down here into this level would be great. This level is just above. It's like 25% away from the high of that weekly gap. The high of that weekly gap we saw on the other chart is here, but we just dropped right down here and we haven't quite hit this level, right? So, and price isn't just, pouring recklessly to the downside as much as this is gradually rolling over, continuing to move, it's gradually rolling over, continuing to move. So, if we're going to get paid today, meaning if we're going to stay in the market, stay active, stay clear thinking, clear headed, then we are going to just keep these thought processes in mind. So I just put a quarter level out there, and now we literally are in the upper 25% of that overall gap between that 4 hour low and that 4 hour high. And we're moving sideways. We're sitting sideways. Okay. Am I looking for a reversal here? My impatience says, look, Grady, you can stay or you can go, right? Through lunch, right through the end of the morning session, prices will do what it's going to do. You can be here for it or you can bail out. If you bail out, oh wow. Hmm. If you bail out, then you can't even be mad or you can't say to yourself, I missed out on, right? You can't, I don't, it's not the fear of missing out, the regret of missing out. You can't even regret missing out on something that you intentionally exited on, right? I need to get a new lens or a new camera or something. I feel like my mm, I don't know. Not is I feel like my ISO is fluctuating and it shouldn't. I thought it should be locked in. Okay, 5 minute candle. We have 2 minutes and 48 seconds left in this 5 minute candle. Just pop to the upside. It is 11:42 a.m. You know what I think I would like to do in this total range on this 15 minute chart? I mean on the 5 minute chart. First, I would like to look at the 10 minute chart. Before I do this, I would like to look at the 10 minute chart before I do this. But I was thinking that I wanted to move my stop loss below the low of one of these, below the low of these up close candles. Because price could turn over and run all the way back up. But if we did, do I still want to be in the trade after that type of a move back to the upside? After we cover that entire distance, um, possibly, right? I possibly want to be in that trade, but this time of day, that type of movement, what do I believe that represents, right? Right? What do I believe that would really represent? On the 10 minute chart, I don't see any opportunity for a reasonable level for me personally. On the 5 minute, being at the high of this last 5 minute candle makes some sense. That makes a little bit of sense, but I really want to move my stop loss down in as deep as I possibly could to lock in more of the profits that we kind of set into, right? We settled into. Mm, 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 That's nice. That's nice. That's nice. That's nice. That's nice. 212. So we've appeased the top step leadership in that range because we crossed 212 and moved my stop loss down because I would like to reward myself for sitting in this trade until we got down below that yellow line. Hmm. Let's go. And another thing I think that's an issue is I might have a little bit of glare off of the screen behind me bouncing back into the camera. And then that glare is representing a reason for the camera to say, you know what, I can't see crap. And so it's adjusting my yeah, it's adjusting my ISO for that. So I'm sure everybody wanted to hear that. I'm sure everybody wanted to hear that. Go ahead, get down. Hmm. Another good idea I heard is when trades are processing, disregard what we see on the screen so that we aren't tempted to intervene, right? So I had like 15 thoughts about moving stop losses, another 40 stops about exiting altogether, considerations about, the TP and all this sort of stuff. But sometimes maybe what I really need to do is I need to let the day happen, right? If I believe that there's a level down here near the opening price of last Wednesday, last Thursday, or it had to be the opening price of last Tuesday. Let price go down there. Like let price get there. Don't do anything to intervene. Don't stop it. Don't don't touch it. Just let it go. Good looking, good looking, good looking, good looking, good looking, good looking. Come on down. Come on down. Again, this reminds me of one of those days where I would want to um, catch the bottom of this market and do all kind of stuff that I want, and just catch the bottom of the market and try to catch the reversal. And we saw that I attempted it at least once, but then I was like, yeah, no, 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 no. And then on the higher time frame, I'm just wanting to see what the distribution looks like. We're approaching the high of the gap for last week, Monday, Tuesday, the 8th of April. And it is within range. I want to say it is roughly. Oh yeah, it's quite a way away. It's quite a way. It's like 130 points away. 130 points away. But today we've moved 500 points off the opening pre-market open or the midnight open rather. Okay. Again, this was not about particularly aggressive or accurate trading as much as this was about um persistent concept evaluation, right? Persistent concept evaluation got us to this point. There's a small gap here on the 5-minute chart. I want to move my stop loss down to here because I want to lock in. It might only be 20 or $30 beyond TP, but excuse me, but I still want to give it room to breathe, and I still want to see whether or not we can go much lower than this. If we trade into this small imbalance at 17,858, sorry, 17,854, that's beautiful. Then we could drop back down below this level and then possibly move lower. If we reverse at this time and it takes me and it stops us out, that's you know, it's less money than whether or not we took profit here. However, also less money than whether or not we drop down and run the prior daily gap. Why? Because we don't know where price is going to stop, right? So we kind of have this strangely open-ended trade going on where instead of us having this area where we want to have the profit hit at, we're letting price just progress because of the extended ranges that was established in the last week. Okay. Let's see if we can take this low out. Let's go. Teague is saying, I'm ready, almost ready for lunch. My stomach is starting to growl. When I first thought that, my first thought is, wow, I should close this trade out, take this profit, come back in the PM session and see if come back in the come back in the PM session and see if I could if there was anything available there. But yeah, I think that thought process is the type of thing that leads a lot of us to over trading, right? Because I suggested to myself, get out of a winning position and attempt to get back in without taking 3 or 4 losses to get back in sync with the market, right? So on one hand, you're saying, yeah, confidence in your ability to trade, good, right? Also, what am I thinking, and why am I thinking that? Who's thinking that, right? Who's thinking make all of these additional actions, right? So more action means more profit. Not in this particular case. In this particular case, less action means continue to allow the profit to grow. Just do nothing. Slow day like this, the market is just trending. Don't do anything. Okay. Come on, go down, go down, go down. We've reached one standard deviation off of my LS3. This is an area now that I am personally concerned about because if we don't go down below this level and trade up to it, then it's going to cause me a little bit of concern. So I'll pull that across and we'll all take a look at that together. So here we have our movement from the morning session. Okay. So I combined the last 3 London sessions here, here, and here. This is Monday. This is Thursday and last Wednesday. From that point, we dropped down. We hit the low of this area, which is the LS3 primary range. And then we began to descend from that point. We hit this level at 0930, and then we begin to descend at this point. Currently, currently, we're at the first, well, the half standard deviation of the primary range, right? Because the standard deviations, right, considered the full range, extended either to the above or below. So we've run half a standard deviation. This is one full standard deviation of this pink area, this pink range, and we just come into the standard deviation of 780, 750. In the past, as we see here, sometimes we'll come into these areas and then we'll move from that area. Another area. There's another area, you see? So as we're moving through these ranges, then it becomes significant when we come into a zone like this. And then we see price become sensitive at this area. Then it's almost as if an alert goes off for me that says, hey, okay, we're interacting with this particular zone. Are we going through, pricing up to it and then delivering lower? Or is this a floor for us, right? Is this a level that says this is a solid rock, this is a solid zone, we're gonna stick here and we're gonna stay here. So, that's the question that's going through my mind now. Now I'm gonna create a another level here because I just wanted to see premium to discount how we're operating. Okay, so now this is the crucial area, literally at the low of this wick at 17,786.50. Going below 17,786.50 is going to be the beginning of what we're discussing. Look at the time. It is 11:56, right? Lunchtime macro is beginning in a little bit. So either we're going to continue lower through the macro or through the lunchtime, or we're going to begin to bounce back and forth in this range in order to accommodate lunchtime price action. Or we're going to move lower prior to lunch. Mm, okay. So I don't have millions on right now, so, like I normally do. But yeah, I'm definitely considering what price looks like as we make this particular bounce right here. So lower time frame, we're low. We match that low. Right straight across here on the lower time frame. This is an issue for me. Moving back above that level, even on the 15-second chart, I don't like that because I can take profit here and be done for the day, right? There's an imbalance on the 15-minute chart right through this range. Do I want to see if we are respecting that imbalance? Excuse me. So on this 15-minute range, on this gap on the 15-minute chart, the question is, am I going to respect premium discount? Right? We're going to trade higher than this level, or we're going to move into the premium. On the 5-minute chart, there's one huge 5-minute candle sitting right there with a tiny little gap way high up in the premium of the 15-minute chart. Hmm. Will we respect that, right? So will we stay below this area in the lowest quarter of that range, or will we reverse off this range? So we can see on the 5-second chart, once that level was established, we went below it, put in a gap, traded around this gap on the 5-second chart. Now we're looking like we're doing something different. And the main thing that is concerning me is the time of day. 11:59, we're coming into the division of the hour. So that means we would need to go to our hourly chart. On the hourly chart, we have 1, 2, 3 consecutive down close hours. And in the last 35 seconds of this hour, we've turned over and we've dropped down just a little bit more. And so we could have 4 consecutive down close hours, right? Or what? Or we have 3 down close hour and one hourly candle that just goes to the moon, right? So what are we gonna do, guys? What are we gonna do? We're gonna hold for the rest of the day? We're gonna load the boat, hold blah, 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 blah. Well, new hour just opened. And what's above the opening price of this current hour candle? This is the current opening price, right? This is the current opening price for this hour. I can't seem to see this wick. All right, so this is the current opening price for this hour. And the important thing I think that we have going on for us here is that we do have this imbalance here, even on this hour. And this hour could run in this high, it can run way up here, and it could turn over to anything. Question: lock in, call it a day, or hold for some, financial dream that not going to be achieved all in one day anyway. Hmm. I think that answer is going to be decided by this 1 minute candle right here. Give it 27 seconds. The area that we arrived at and the time of day are still suggesting to me that it's probably more beneficial to me to exit now than it would be for me to stay in and watch price action. Why? Because of trader fatigue, right? If you're not used to trading for 8 straight hours where you're just sitting in front of the computer and trade after trade after trade, you're battling it out mentally, then it probably would be in your best interest to trade till about noon, put in 2.5 good hours of trading, and then call it. So we can finish the day green, more green than we wanted to be. Oh, and we had other goals. We had other goals that I need to keep in consideration. So my other goals that I wanted to keep into consideration is working on that previous drawdown for that massive $2,000 max drawdown day that I incurred, and then getting us back over $100,000. We are within $370 of that goal. So should I play with it or should I exit here? I am going to 308, 313, 315, 312. I'm going to exit here. I think that was a good thing to do. Matter of fact, this is what I'm going to do. Move my stop loss down to here, right? So the prices that locks us in for a bit more of that, and then you know we're doing both, right? Come on, take us out, baby. Go ahead. I really wanted to see price just really go ahead and get down at this point. 304, 303. I'm not gonna wait for it because I want those $3. Remember, this is the beginning of the new hour, so this could just be the wick at the high end of the candle, and we could run right back down to the opening price. We are sitting at 307, 305, and I'm gonna cut it here. And that's gonna be it for today, guys. Thank you for trading with us. Thank you for watching. Um, Closed it. Please like and subscribe. I am Grady on the charts, and hey guys, be mindful and be patient when you trade because when you're trading because go ahead and watch yourself. Watch yourself when you're trading. The market is going to go up or it's going to go down or it's going to go sideways, right? The trader could do anything. The trader is the variable in the entire process. We know the multiple, there's a finite number of things that the market can do. It could be a straight line sideways for the rest of the day, right? That's fine. The trader can look at a straight line going sideways and start taking trades. That's that's illogical, right? We'll do those types of things. So take your time, trade wisely. Um I need to get a quick sip of water here. Trade wisely, take your time, set realistic goals for yourself. Mm. Keep a realistic pace as well, right? Keep a realistic pace. We're not if you haven't grown to the point where you're gonna make 5 grand a day, and one day you hit 5 grand, whatever your previous level was the day before that, go back to that trading process. That's the trading process that made you the 5,000, right? If that makes sense. There was no other process, no other mindset that had you having that great winning day. Trade like that. Where you saying, oh, but I'm trading micros and it's taking me a while to, yes, it is taking you a while. You know why it's taking you a while? Because it needs to take a while. It needs to. If it doesn't take a while, then if it didn't take a while, then you get on and you load it up with ten minis, and then you'd sit back, you put your stop loss on, and then you go wash your car. Mm, but nobody's doing that. Not even the people who pulling in the large amounts. So, excuse me, if you're a little bit older and you're still a new trader in the market, yeah, be patient with yourself, and at the same time, if you want to be hard on yourself, be hard on yourself while you're studying. When you're studying, don't skip it. When you're taking your notes, don't skip taking your notes. When you're reviewing your trades, don't skip that part. That's the part where we clock in. We clock in, we clock out. Because those types of things they don't go away. They're kind of programmed in our minds. A need to understand that I have certain KPIs, right? Clock in, clock in. And some people say lock in. I mean, yeah, lock in and clock in. You do what you have to do. All right. Thank you guys. Hope you enjoyed today's trade. Please like and subscribe. Remember, this is trading entertainment. These are not necessarily trading signals, so I'm not trying to guide you into profitability. I'm just trying to show you that trading is risky and there are struggles associated with it for every trader on every level. Um, Thank you guys very much. Check out some of the other videos I have on this channel. Like and subscribe, and we will see you on the morrow. I am Grady on the trades. No, I'm not. I'm Grady on the charts.